When it comes to your money, a popular decision for saving is turning to Roth IRAs. Garrison III from Preservation Financial is here to tell us how to maximize Roth IRA benefits. Thanks so much for being here, Davis. We appreciate it. Yes, happy Friday. So let's just start in general. What exactly is a Roth IRA?
A Roth IRA is a vehicle that you can convert an existing traditional IRA to, or just start funding on your own. The biggest key to it is age 59 and a half. Once you attain age 59 and a half, you can withdraw, and this is the big difference, you can withdraw the earnings and your contributions tax and penalty free.
Wow, and so that's what makes them so popular for people, right? Exactly, but there's a lot of time frames and some rules that have to be met in order to do that, right?
Exactly. And one of the biggest things that people need to realize is there is what's called a 5-year rule. All right, if you're under age 59 and a half, and this does not apply if you're over age 59 and a half or 59 and a half on the nose, but you have to, as soon as you open a Roth IRA or convert to it, then the IRS deems January 1st of that year, so you actually have an entire year to apply towards the 5-year rule. And that 5-year rule it triggers when you can withdraw tax and penalty free. There are two basic clocks, for lack of a better term, that apply to it.
Like Roth IRA clocks.
Exactly. And the first one is clock number 1 is penalty free, has to do with penalty free distributions from Roth IRA conversions. And if you're 59 and a half or older, you can totally disregard clock number 1.
Okay.
Clock number 2 has to do with tax-free distributions from Roth IRAs and the earnings. And if you have tax-free earnings over a lifetime, you're talking about a chunk of change that you can avoid. Plus, right now, the Tax Act that President Trump enacted, it's the lowest taxes that there have been in over 20 years. And so now is the time to do it. If you missed 2010, you were allowed to, once you convert a traditional IRA, you were allowed to not pay taxes in 2010 on the converted amount. You could spread it over 3 payments. And so they also abolished the estate tax in 2010, which was counterintuitive by the IRS because, as an example, George Steinbrenner died in the summer of 2010. His estate paid no estate tax.
Wow, very interesting. A lot of great information that you have. Unfortunately, we're out of time, but there's so much information, especially for those that are interested in Roth IRAs.
Give us a call.
Yes, give Davis a call, and you'll be back next week. Of course, we can finish this conversation. Stop by Preservation Financial Group. They're located on Sunset Drive in downtown Johnson City, or give them a call or check them out online, preservationfinancialgroup.net. They are there to help you tackle all your questions, especially when it comes to your money. Thanks again, Davis. We appreciate it.